The other event was on Teladoc, which, again, what they're talking about, like the guidance was poor for Q1. They back end loaded the year. The margin question is is really back end loaded. So this idea that you might be trading at 8 or 9 times EV to sales, but you're still well above anything that looks reasonable on an EV to EBITDA basis. And then as you're going through the numbers, like this key driver, they bought Livongo and they added 4,000 lives on a 720,000 base. This is not this great marriage of I've got 52 million covered lives for Teladoc and I'm going to buy this 500,000 live business on Livongo and I'm going to cross sell and do all this great stuff. It's just not, none of the good stuff is happening. And I think what you're seeing is a reckoning of, EV to sales isn't so interesting. The TAM isn't so big. And oh, by the way, it's actually still really expensive. And I think that's what you've been talking about with Quad 4 and that what you were just saying about cash flows. That's what's happening here in a context of our checks when we talk to people who are in the line, right? Like healthcare benefits people or brokers or whoever, that community doesn't know anything about Teladoc Primary 360, which is their big, super special product. To our view, it's not happening. Again, momentum is negative. And what you're seeing on the questioning and where the estimate trend is going this morning, price targets coming down, estimates are probably going to be coming down, probably for 23 and beyond. And that kind of duration of the slope, that's really bad for your multiple. And that's what's happening today. I mean, there's no, I'm not at any rush on this to cover either. I mean, I don't know how low it could go, but we sort of thought $60 looked reasonable when we put this on, if the wheels really came off. And now, here we are, but I don't, it's still not any reason to do anything different than what we're doing. And that's it.
If the wheels came off, they definitely just came off. And this stock could easily go to 55. I mean, there's no, went a lot lower than that, but that's not always a good reference point. But again, it's, when you go from being a big TAM stock or a big idea stock with unlimited market share opportunity in a place like colonoscopy where everyone can sell you the dream. I mean, I don't know there's no reference point on the multiple because your forward, growth rates aren't even remotely close to what they were prior. So that's
right. So, and that's just it. Like if you have, you can buy, I mean, I think when I tried to do this analysis, I didn't have, the data wasn't good enough to really, but what it looks like is things want to bottom in this sort of 6 to 8 times EV to sales, like all your speculative stuff. Like that's where the lows seem to settle out. And
for now, that's a very high multiple looking back historically.
Yeah, but where you start to reprice in with I think there's a bit of a swing factor, right? Like the bottom, like I'm not measuring the all-time low. I'm looking at sort of what's the average for the quarter. So you could probably come in high, hit a low, and start coming out at a different level. But I think people gravitate towards that number, and that at least that's what the data says. I just don't think there's no rush. I'm not in any rush with Quad 4, and because the probability and the slugging percentage for slowing estimate momentum is just, it is what it is, and I'll just stick with that.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.